Bitcoin alone is going to be the biggest part of the entire crypto asset ecosystem. Our expectation out in 2030 that it will be a $20 trillion. It will be worth $20 trillion. Now, how much will ETFs get of that $20 trillion? I don't know, but that already right there is, if you think about it, it runs circles around SPY, number one, and I believe all of public equities globally, no matter what wrapper they're in, are valued right now at roughly $120 trillion. So when I say 20 trillion by 2030, that's a very big category.
Bitcoin has recently reached an all-time high of $70,000, marking a milestone in its upward trajectory, even as traders explore alternative avenues for higher returns in meme coins. Following its peak at $70,000, Bitcoin slightly retreated to trade around $68,000, while Ether approached $4,000 for the first time since December 2021. With all of this news, Bitcoin is expected to dominate the entire cryptocurrency ecosystem, with Cathie Wood predicting a $20 trillion market value by 2030. This significant increase could bring benefits to investors, institutions, and the broader cryptocurrency market. With its limited supply, decentralized nature, and increasing institutional adoption, Bitcoin is poised to revolutionize the global financial system. In a recent interview, Cathie Wood, CEO of ARK Invest, discusses Bitcoin's potential to disrupt traditional finance and shape the future. Wood highlights the significance of Bitcoin ETFs, which currently hold about 3.9% of all Bitcoin, and emphasizes the upcoming Bitcoin halving event, which could drive up demand and prices, strengthening Bitcoin's value. We will now bring you clips from the interview. As we show you these clips, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Make sure to watch the video until the end, where Cathie Wood shares one major reason why Bitcoin is essential for everyone. We hope you enjoy the video.
All of the ETFs out there right now hold about 3.9%, roughly 4%, as of today, of all the Bitcoin outstanding. Now, the really interesting thing about that is if you look at on-chain analytics, which our analyst David Puel does for us, you'll see that long-term holders account for, I believe, 15 million of the Bitcoin outstanding, roughly 15 million. Total outstanding right now is 19.5 million. And the total that will ever be outstanding is 21 million. Those long-term holders are not selling. That's what's going on with the price right now. And the flows into the ETFs which have taken the friction out of buying Bitcoin, and which can be used as collateral for loans, whereas Bitcoin itself cannot, suggest to us that that added 1.5 million to go in Bitcoin is going to have to cover a lot of investors, institutions, and so forth. In other words, the price will have to go high enough to wrest the supply, some of the supply, out of long-term holder hands. And just to clarify, long-term holders, and again, you can track this on chain, they have not moved their Bitcoin from their wallets in at least 155 days. And when that occurs, the odds that they will move their Bitcoin go down dramatically unless the price spikes dramatically. So the halving, so we'll go from roughly 1.9% growth in Bitcoin supply per year down to 0.9%. So we will drop below 1% for the first time. And if you look at the long-term history of gold, very long-term, what you'll find is the average supply growth has been roughly 1%. So now Bitcoin supply growth is dropping below the supply growth of gold. That is a milestone, I would say. And the other difference here is when the gold price spikes, there's usually a mining response and the supply spikes with it. That cannot happen with Bitcoin. So it's quite a different dynamic. So the halving is that milestone. And if you look historically after halvings, it's usually been very good for the Bitcoin price. Now, it doesn't happen right away. I don't know why it doesn't happen right away, but it doesn't. Now that the market's becoming more efficient with ETFs, it might, because think about how many people even know about the halving this time around, when they didn't even know what Bitcoin was 4 years ago. They didn't know what it truly was. And if I can just throw one in terms of how we try and describe what this monetary revolution is, and each one of these words is important. The first, global, that's critical. Private, no government oversight. Digital, decentralized, rules-based monetary system in history. It is what my mentor, and many people know Art Laffer for his Laffer curve and fiscal policy and so forth. He's a monetary scholar as well. And he said, I have been waiting for this for 50 years, ever since they closed the gold window here in the United States in 1971. The financial markets, when you've got the entire ETF infrastructure out there ready to arbitrage these sorts of events, we may pull forward the price increase and accelerate the transition you're talking about.
In just under 2 months since the SEC approved the first spot Bitcoin ETFs in the US, these ETFs have surpassed expectations, attracting a cumulative total net inflow of $9.37 billion, according to Soso Value data. Both institutional and retail interest in Bitcoin and the ETFs has surged, with asset managers diving in and investors capitalizing on the ETF effect, as noted by Bloomberg's ETF analyst Eric Balchunas. Traders are now closely monitoring Bitcoin's price, with anticipation that the asset may hit $100,000 ahead of the halving event in April. Despite some institutions like Vanguard dismissing Bitcoin, Wood believes they are overlooking its potential as a new asset class, which could lead to increased returns and outperformance. Additionally, Wood discusses the role of trust in the current monetary system, highlighting Bitcoin's potential as a hedge against fiat currency devaluation, particularly in emerging markets. Let us now go back to the interview as Cathie Wood discusses these major points.
I think something very important happened last year. In March of 23, regional bank crisis here in the United States. Regional banks imploded, some went bankrupt, and Bitcoin exploded. It went from 19,000 to more than 40,000. What did that demonstrate? That demonstrated that Bitcoin does not have counterparty risk like banks do. And so it became a risk-off asset. Before, we had just thought of it as a risk-on asset. When liquidity is flowing, Bitcoin will be one of the prime beneficiaries. But this idea that it is also a risk asset, and as we hope we've shown in our own new asset class paper, white paper, its correlation with other assets is so low that institutions have a fiduciary responsibility from an asset allocation point of view to at least look at it. And if they want to dismiss it, fine. Vanguard did. But what we think that Vanguard is doing is, well, one of two things. Vanguard has never invested in commodities, so it's just treating this like a commodity. For the most part, it hasn't. But we think it's a new asset class, and Vanguard will be depriving its clients of access to a new asset class, which, if there continues to be low correlation of returns, what will happen is those using it will see increased returns per unit of risk, and they will outcompete the Vanguard advisors. So, I think there will become, even for the Vanguard ecosystem, a demand pull. One thing I will say, right now, no wirehouse, so whether we're talking about Morgan Stanley or Merrill Lynch, B of A, or UBS or Wells Fargo, no platform has approved Bitcoin yet. So all of this price action has happened before they approved it. And so, we haven't even begun with our new expectations for institutional involvement. The incremental price that we assume for institutions actually has more than doubled. So, I don't want to give out any particular prices, but because we don't know how quickly the more independent registered investment advisors in the United States, those platforms are saying, give us 3 months to do our due diligence. The others are saying we need at least 6 months. So, I would put those in the institutional bucket as well. If a country's currency is going down, but Bitcoin's going up, that's a huge hedge. It's going to protect them against that eventuality, because what usually happens is the IMF comes in and basically tells them, we want you to increase your taxes, cut your spending, we're going to regulate you more, and it would be 180 degrees against what I would recommend. But that's the IMF prescription. So to protect against that, Bitcoin would be a very good hedge.
Cathie Wood highlights that with increasing recognition of Bitcoin's benefits among institutions, there's a probable surge in investments, leading to its price rise and broader acceptance. With expanding institutional adoption and clearer regulations, Bitcoin is set to play a significant role in investment portfolios and financial transactions worldwide. Regardless of whether it's used for safeguarding value, hedging against inflation, or enabling transactions, Bitcoin's impact on the future of finance cannot be denied. Meanwhile, according to DeFi analyst Chris Newhouse, as Bitcoin stabilizes at its current levels and Ether demonstrates strong performance in the short term, attention is shifting towards alternative coins and emerging narratives. The surge in Ether's price is driven by growing expectations that it will be the next cryptocurrency to receive approval for exchange-traded funds by the US Securities and Exchange Commission. The demand for Bitcoin ETFs, which were approved in January, has been a major factor behind Bitcoin's more than 60% rally this year. While Bitcoin reached $70,000 for the first time, traders also turned their focus to fringe tokens like Dogecoin and Pepe, which experienced double-digit percentage gains. Ether, the second largest cryptocurrency, has shown significant growth, rising by approximately 16% this week, even surpassing Bitcoin's performance. Meme coins have been a phenomenon among retail crypto investors and promoters for some time, as they view the low prices as an opportunity for quick and substantial returns despite the lack of traditional fundamentals. Tokens like Shiba Inu were popular in the last bull market, while Dogecoin is considered the original meme coin by many in the industry. Traders are now eyeing Pepe, UEF, and other newcomers as the next big opportunity. What are your thoughts on the recent surge in Bitcoin's price and the growing interest in cryptocurrency ETFs? Do you consider meme coins as viable investment opportunities or speculative assets? Feel free to express your thoughts in the comments section. If you enjoyed this video and found it informative, please consider giving it a thumbs up and subscribing to our channel for additional expert analysis on cryptocurrency, finance, and technology. Make sure to enable post notifications to stay updated on our latest content. Thank you for watching, and we look forward to seeing you again in our future videos. As always, happy investing.